Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders. For general trading, our website is www.stochastic-madi.com. For Elliott wave trading, www.24elliottwaves.com. For advanced trading, www.dayprotraders.com. The title of the video is Elliott Wave Question and Answer. Elliott Wave Q&A. All right. In this video, I'm going to answer two questions that a member of www.24Elliott Wave, a trader, has asked. Okay. The first question is about drawing the Elliott wave. Okay, so when we are counting wave, first wave, second wave, okay, first wave, second wave, third wave, fourth wave, okay, and the fifth wave when we are drawing the Elliott wave. All right, okay, because it's very important for traders to understand. The first thing that we want to understand is this: why are we counting wave? Okay. Why are we counting wave? All right. Why do we look for the internal waves? So, what are you trying to achieve? This is the question, because the Elliott wave theory is a trading tool that we use for day trading, for swing trading, for investment, and also to forecast the market. So, now, when you are counting wave, you want to know, okay, the price structure. Where are we now? Okay, are we in the third wave? Are we in the second wave? Are we in the third wave? Are we in the fourth wave? Are we in the fifth wave? That's why we count wave. Another reason why we count wave is to know, okay, whether the Elliott wave cycle has ended. Okay, this is very important. So, why am I saying this? Because we don't want to count wave for the pleasure of counting wave. So whichever exercise you are doing, okay, you have a reason for it, why you are counting wave, why you want to know the internal wave. There are reasons why you want to know. Sometimes you don't need to know the internal wave. Sometimes you want to know, okay? So, for instance, if you want to know what is whether a pattern is a zigzag pattern, you want to count the internal wave. 1, 2, 3, 4, 5, 1, 2, 3, 1, 2, 3, 4, 5, okay? So when we want to know the internal waves, we want to, okay, label a pattern, all right? Is it a flat correction, all right? Is it a zigzag pattern? Okay. These are the reasons why we want to know the internal wave. Is it an impulsive wave? Is it a corrective wave? So we count the wave. We want to know the internal wave. So if I want to know, for instance, whether it's a corrective wave, if it's not very clear for me on a time frame like this, I'm on a yearly chart, the price move from here to here, this is quite impulsive, okay? But the reason why we count the wave, okay, is to label, okay, a wave pattern, or to know where we are. Are we in the third wave? Are we in the fourth wave? Are we at the end of the second wave? All right? This is why we count wave, all right? So the first question was that when I'm drawing my Elliott wave in my YouTube video, sometime when we see okay, a week like this, when we have a volatility like this, so price, you see the price went up here, but did close here. Do we draw the wave up to the end of the closing price, or up to the high of the candle, like here, all the way up here, or do you put it here? I will answer that question now, okay? There are two types of wave count, okay? So the first wave count, okay? So you want to count wave, so you don't just go and see it straight away. So you do a bit of work. So you count it and you recount it. Okay, you look on a higher time frame, you look on a lower time frame, is to validate your wave count. All right. Now, one of the reasons why we can draw, for instance, this wave from here to the end of the closing price instead of the high of this candle, the simple reason is that we want to go into the mind of other traders. So when we are talking about area wave, if you put 5 traders here today and you tell them to count wave, you will see that they will count wave. Some will count in a different way, and you'll be surprised that there will be some differences between the wave count. Okay, all right. So the reason why I may decide to count my wave up to here, this is the first reason, is my trading style. So if you see me putting it here, that's my wave count. Okay, so instead of putting it at the end of the candle, I may decide to put it here. All right, but if I decided to put it here instead of here, I may also try to go into the mind of other traders that will put it at the closing price. So this exercise of putting it either at the end of the high or at the closing price is just to see. So you count it, for instance, if you put it here at the high and you go to the lower time frame, and you notice that, in fact, okay, your internal wave inside this channel, the internal wave of this higher degree wave, in fact, has ended here. So you will notice straight away that, okay, it's better to count the third area wave to end here. So for instance, if I call this the third wave, for instance, and then I go, for instance, on a weekly chart, and I see the internal wave, and when I was highlighting the internal wave on a weekly chart, all right, and I have noticed that the fifth internal wave has ended here instead of here, all right, I will label my third area wave from here to here. Sometimes, when you put the end of the wave, like here on the closing price, and then you go and check the internal wave, you may notice quickly that, in fact, the fifth internal wave has ended at a high. In that case, you label your third area wave from here to the end of the high of this candle. So, what I say to traders all the time is that the most important thing in trading is the trend. So, you are counting wave, you want to buy, you want to be in an uptrend. So, you don't want to violate the market pattern. This is what we call the market stable data. The market stable data, okay, is superior to any wave pattern, okay? All right? So I hope I answer your question, because you can count it here, and then you go and check the internal wave. You notice that when you count the 1, 2, 3, 4, 5, the internal wave or this higher degree wave, you notice that it has ended here. So then you will put it here. Sometimes you may put it here like this at a high, and then you go and count the internal wave, and you will see clearly on the lower time frame, okay, on another time frame, that in fact the internal wave has ended here. Then you will discount the volatility or the wick of the candle. It makes sense? So do not worry about it. You can use both. So you can draw it all the way here, okay, and you can draw it also to the closing price. But as you are counting the wave, because wave count is dynamic, okay? Because when we are using, okay, for instance, a historical chart where we can see 5 waves, it has happened before we count the wave. Sometimes we are counting the wave in a real time, which means the 4th wave is not yet completed, all right? We are in a 3rd wave, all right? As the price progression, we may have to readjust our wave count. So because we don't know what the price will do next, all right? How far the price will go down, whether we go down 50%, 60, okay, 1.8% or not. We don't know until it's completed. So the wave count is dynamic. Professionals use two wave count. So the first wave count, so they count it fast, okay? They say, okay, that's what I see. You don't want to lie to yourself. That's what you see. So you just label it, okay? And then again, you try to count it again as the price progressing or as the market is moving, and then you realize that, okay, the best wave count is this one. But there are guidance that we follow, okay, which we talk about already on our website, okay, consolidation, breakout, the first wave, the characteristic of the first wave, talking about the mind game, the Elliott wave mind game. So you go to www.24elliottwave.com, you go to click on the mind game. We talk about each wave, the characteristic of the first wave, the characteristic of the second wave, the characteristic of the third wave, the fourth wave, and the fifth wave. All right? So this is one of the questions that a trader has asked, okay? The next question is that sometimes I draw my line like this and I don't highlight the internal wave. Well, as I said at the beginning of this video, why do you need to know the internal wave? So anytime you want to know the internal wave, you have a reason. Either you want to do a market forecast, or you are not sure whether your, like here, your third wave should end here or here. So you will go to another lower time frame to see the internal wave. But I need to highlight to traders that sometimes you may not see the internal wave at all. You go to other time frame, it's not clear. It's not visible. There's nothing you can do with it. So you can only work with what you have got. So if I need to know the internal wave, then I will try to find them. All right? But if I don't need to know, then I don't worry about it. Now, the trouble that traders face when they're counting waves, sometimes they stuck on one time frame alone. So they count the wave on the daily chart and they say, this is the end of the Elliott wave. But we are working with, the Elliott wave principles. A wave of a higher degree, okay, first wave, third wave, and fifth wave can be divided into 5 waves. But do we have to know the internal wave of each impulsive wave? Why do we want to know? This is very important. Why do you need to know? All right? Why do you want to know? Okay? Are you doing a market forecast? Are you combining the Elliott wave and fractal trading? Okay? So these are the questions you need to know. One of the reasons why traders want to know the internal wave, they are not sure whether, they are not sure whether this is the first wave or this is the third wave. So they don't know whether this is an impulsive wave or this is a corrective wave. All right? So they go and look at the internal wave. One example that traders face very often. So you see the price, okay? So especially the zigzag pattern, price went down 1, okay, 2, 3, 4, 5 wave. Okay? So normally when we see 5, we will say it's an impulsive wave. Then you look back, all right, and you will see clearly that, in fact, the 5 wave in this case is not an impulsive wave. Though you see 1, 2, 3, 4, 5 is the first part of the zigzag pattern. So the zigzag pattern is a corrective wave. All right? That is formed of the internal wave of the zigzag pattern. So in fact, it's ABC, like this. Price goes down, price goes up, and price goes down. That's the zigzag pattern. But the first part of the zigzag pattern is divided, the internal wave of the first part of the zigzag pattern is formed of a 5 internal wave, subwave. The second part is formed of a 3 subwave, and the third part is formed also of 5 subwave. Though we have 5 subwave, this is not an impulsive wave, it's a corrective wave. A corrective wave is always correcting a previous trend. So when we look on our left-hand side, we will notice that probably the price is out of a channel, or there was 5 waves before, a correction has started, and the first part of the correction is formed of 1, 2, 3, 4, 5 for the zigzag, 1, 2, 3 for the second part, and 1, 2, 3, 4, 5. So when we want, anytime we try to know whether what we want to know the internal wave, we want to see them, all right? We want to verify the pattern, a pattern. There are 13 specific Elliott wave patterns, all right? I want to show you something here. Okay, the next thing I want to mention to traders is that every trader is different. All right, so that's why when I'm counting wave, a trader may say, "Joe, you are wrong." I say to them, "This is my wave count." Okay. All right. A trader may disagree with another trader and say, "Your wave count is wrong." Only after a few days later, the same trader may come around and say, yes, your wave count is wrong. As the market is progressing, because we are counting the wave in real time, okay, if the cycle is not completed, suppose you are counting, you count the first wave, now you are waiting for the second wave, you want to know whether the second wave is completed. And then you count the third wave, you want to know whether the third wave is completed. All right? So you will use the Elliott wave principle, the rules that one should follow. Okay, we have discussed this in many of our videos. That's why I refer traders back to www.youtube.com /24 Elliott wave. The user 24 Elliott waves. So put in 24 Elliott wave channel on Google, and you will see our Elliott wave YouTube channel. There are plenty of videos about the flat correction, the zigzag pattern, the mind game of Elliott wave, when we look at each wave and we discuss the characteristic of each wave. We want to understand each wave, and there are 13 specific Elliott wave patterns. Okay, and I want to show you something here. There are two excellent books that I would like to recommend to traders. Okay, these books. Traders, if you want to learn the Elliott wave theory, I recommend these two books to traders, which they can buy. Okay, they are not too expensive. Okay, they can to upgrade their knowledge if you want to know the theory. What we are trying to do is to share with traders the wave strategies. Okay, on our website. Okay, and also on our YouTube channel. But one thing you will understand later on is that as you continue to learn more about Elliott wave, you will develop your own trading style. This is very, very important because sometimes you will be surprised how the reality of the market is different sometimes, and you will face a great challenge sometimes when you are trying, to count wave or to label a pattern. All right. So when we are drawing the wave counts, we can also try to go into the mind of other traders. So, for instance, if you draw your wave, your wave up to the end of the week of the candle, all right. Now, there are other traders that will not draw it that way. They will put it at the closing price. Some traders, never, whether they are drawing the Fibonacci retracement or the Fibonacci extension, they will always discount, the wick or the shadow of the candlestick bar. Some traders will always draw it from the beginning of the high to the lowest point. But not all traders, have the same trading style. So sometimes we draw it to go into the mind of other traders, or sometimes, as I said to you, you have your preferred wave count, which is the second wave count, your first wave count, so you are looking at it, you draw it, you put it aside. The most important is to get it right in a direction of the market pattern. One thing that traders should be careful about, which I talk about all the time, is that you don't want to use the Elliott wave theory like a science. If you use the Elliott wave like a science, you will lose big time. I mean, that's my personal view. You can disagree, but this is what's happening. I see all the time when traders, go and learn the theory, and they try to apply the theory as the theory, and sometimes they get into trouble because there are volatility in the market, there are what we call distortion in the market. So sometimes there are distortions which will mess up the patterns. So how do you filter out the distortions? All right? How do you filter out the distortions? Over the year, with your own experience and more practice, you will be able to know that this is a distortion. I should discount this price move. All right? You can cover it completely or put a cross on it and know that I prefer to put a cross in this section of the price move because I consider this as a distortion. Another trader may say, no, you can't do that. But if you can recognize distortion, you can do that because the wave count does not include the distorted market because something has changed. The normal progression has been distorted. So if we include the distortion in our wave count, we can get it completely wrong. So it's one thing to know about all the 13 area wave pattern, and another to use it in real time to forecast the market and to make excellent decisions. But to avoid making a lot of mistakes, one should not violate the three market pattern: the rising channel, the declining channel, and the horizontal channel. When do we have a flat correction? This is about the mind game or the characteristic of each wave. We talk about the mind game or the flat correction on our YouTube channel, how the pattern forms. When do we have a flat correction? All right? If you have a strong bullish trend, very strong bullish trend, you are likely to see a flat correction. All right? So we want to know the internal wave. If we are not sure about the wave, we want to validate the wave as a third wave, as an impulsive wave, or we want to validate an Elliott wave pattern. So we'll go and look at the internal wave. We can also try to find out about, we want to know the internal wave if we want to forecast the market by combining the Elliott wave theory with fractal patterns. That's a more advanced Elliott wave trading. All right? So I'm looking for some of the books that I think anyone that wants to learn about Elliott wave must know. Okay, let's see here, 2 books, okay, that trader must have that will help them to understand the theory. But the most important thing is the practice. So you will never, be able to count wave correctly if you don't start practicing. All right? There are rules that we follow, like the second wave should not overlap, the first wave. The fourth wave should not overlap or the second wave, for instance. The fourth wave should not overlap the second wave, for instance, and the second wave should not cancel the first wave. Now, what will happen if the fourth wave overlaps the second wave? How do you handle that? Now you want to check the internal wave to know whether you have instead, A, B, C, D, E, a chart pattern. Is it a corrective wave? Then you will check the internal wave. When we count wave and it's not very clear and we are not very sure, sometimes by checking another time frame, we may see the internal waves. But you may not see sometimes. You will go and look on all the lower time frame and they are not very clear. They are confusing. So do you want to stay confused? No. You want to keep it very simple. So you will work with what you got. So you will just work with what you got. You will put that wave count aside. If you are not very sure, just put a question mark on it and say, this is my wave count. Okay, but I may be wrong here. It's part of, even the financial analyst will tell you that. Sometimes the wave count can be confusing. Sometimes it can be very clear. All right, very, very clear and easy to count. Sometimes it may take you a lot of time to decipher completely all the. I need to change my browser if I want to see what I'm looking for. So what I need to do, I'll close this and use instead Chrome, and we will be able to see what I'm looking for, because with Mozilla we cannot see what I'm looking for. All right, so understand that we use the wave count also to understand how another trader may count their wave. Why do we need to know what other traders are doing? Because they can mess up our trade. So we can do this kind of exercise. So I draw my wave count. Okay, then I want to know how another ordinary trader or somebody else may draw it. So I can put it to the side, because these people may sell or buy because of their wave count. So or sometimes I may have, even though if my wave count is correct and I know that the market did not see yet what I have already known, which means if you are the only person that have counted the wave correctly, but 90% of the market counted wrongly, you may have to wait for them, because if you go alone, they will screw you up. You don't want that. So you can see that, okay, these people are likely to call this the third wave, but in fact, it's not the third wave, it's the first wave. So you have to wait for them, like we have seen for the, okay, the dollar yen, for instance. Then you have to wait and pull back or flow with the market pattern. The market pattern will never get you into trouble, because it's a market stable data, the rising channel, the declining channel, and a horizontal channel. All right? This is something we need to know. If we are in a motive wave, the motive wave is always either in a rising channel or in a declining channel. So if you see a motive wave and you count, for instance, 1, 2, 3, 4, 5 in a channel, all right, in a horizontal channel, then you're going to ask yourself, what kind of motive wave is this? The motive wave is always either in a rising channel or in a declining channel. Okay, so with the market pattern, this is what we are talking about. There was another question about the TSTW24, which I can answer now. There is nothing about Elliott wave in a TSTW24 or a TSTWSYS usually. Nothing. 0, 0, 0. Why? Because the Elliott wave patterns or the Elliott wave theory or the wave strategies are in fact another trading system. Traders, if you consider yourself as an Elliott wave trader, then you have to work with Elliott wave patterns. Don't go and buy any trading system, because it's not going to work for you. You can buy a trading software that is counting well. I can tell you one now, which you can go and buy, okay? And this software will be counting the way for you. My recommendation to traders, because people go around, there are a lot of websites now about review, about this blah, 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 which is great. But sometimes I watch some of the review and I'm just thinking in my mind, what these people are talking about. So because maybe one person used another software somewhere and it didn't work for them, so they go around and spam the web and say that this website, this software is useless, this blah, blah, blah is useless. But it's just not the case. If, for instance, if you purchase, okay, let's go, and if you purchase, for instance, a software that is counting the Elliott wave for you, all right, you have two traders that are using the same software, okay? So one of them, somebody who understands very well the Elliott wave. The other one does not know anything about Elliott wave. Who do you think will give the best review about the software? It's the one that understands the Elliott wave theory correctly. Because the software, like I said to you, there are distortions, there are messy situations where the software will label something, and if yourself you understand the Elliott wave theory, you may see straight away that, no, this is not a zigzag, okay? The software got it wrong here. That doesn't mean that the software is a useless software, but it's just because the market was distorted. All right? Look at it. It's going on all the time. The market is distorted sometimes, and you have to filter out. The same thing when we are talking about the Fibonacci pattern. All right? Sometimes you may see a Fibonacci pattern that is seriously, okay, distorted. One may look at it and say, no, this is not a crab pattern. But it is a crab pattern that has been distorted. But if you apply the theory of the crab pattern, okay, exactly the same ratio as they told you in a theory, blah, 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 you open the book, you read it black and white, you will say that this is not a crab pattern. But in fact, it's a hidden crab pattern that has been distorted. All right? It's going on all the time in this market. Because, for instance, if a crab pattern has ended, okay, a bullish crab pattern has ended and people want to buy, a pattern is completed, and people want to buy, another, what we call dangerous trader, may sell them down. And price goes down, distorting the pattern. And then people say, no, this is not a crab pattern because this ratio. But because they could not recognize that there was a distortion. But I cannot teach traders to recognize distortion. It will come through the experience. All right? What is a distortion? Okay? There are some videos on YouTube which I post on the dayprotrader.com about distortion. But the key is more about personal experience. All right? I want to show, I'm still waiting for this webpage to open so I can show you the books that I can recommend to traders that they can have a look and see whether it's suitable for them, and they can go and know. So these are questions. So TSCW 24 or SY008 has nothing to do with Elliott wave at all. No, you won't see even one word about Elliott wave in the document on these two trading systems. These are trading systems, they are not trading software. But there is also a software if somebody wants to count wave, which I will show you by the end of this video. And you can, if you want to buy, you go and buy yourself. And there is a trial period, 14-day trial period. You can try it. And if it's well, you like it, okay, you can apply it. But the bottom line is that if you know Elliott wave correctly, you will benefit more from the software. Because the software, you know, when sometimes people build software for hedge funds, okay, for big institutions, these are professionals, okay, they understand the Elliott wave. But because they don't want to go around, okay, counting, okay, the wave on 100 stocks, they will prefer a software to do it for them, which is easier. So the software will do blah, blah, blah. But then the professional will look at it and say, no, this is not correct. No, yeah, this is correct. Okay. The same thing if you purchase a software. There was a software. I will look at it and post a video about it. About MACD. This software will give MACD signal, and you will see sometimes that the signal is completely wrong because MACD has been distorted due to volatility in the market, or sometimes due to market manipulation also, or for various reasons, okay, or sometimes because of bank holidays can create also a distortion. The market was closed, and sometimes the price gaps up or gaps down can create also a distortion in the market. So you may see sometimes you will see from the beginning of the fourth wave price will gap up fast, okay, and you may not see, okay, your flat correction, the beginning of your flat correction because of the gap. All right, this is happening all the time. But now it's up to you to know that this was a distortion, that in fact this part of the pattern is hidden somewhere here. So this is your wave count. You will put it aside. But anytime you want to buy or invest, do not forget other market participants, because you want to know what other traders will do or what somebody else will do. So you will draw it a different way, can be a crazy way, to know what other traders are thinking. If you are counting with and you think that this is the best, yes, I tell you, I'm the expert, okay, I know this is the best, this is the best, this is the best. And you go around and you force it without paying attention to other traders, you will end up, okay, forcing, okay, the market, which is not the right way forward, okay? So I think I've answered, okay, the two questions. The most important thing is to develop your own trading style and to go step by step. First, learn the theory and then try to apply it. The guidelines is about the mind game of trading. Each wave has each characteristic. What is the characteristic of the first area wave? This is critical for traders to know the behavior of the first wave. What is the behavior of the second wave, the third wave, the fourth wave, and the fifth wave? Why the fourth wave should be swift? These are the rules and the principles that we apply. We talk about it on our YouTube channel already. It's all there. So all the time, I'll send traders back to our YouTube channels, okay? And this is it. But sometimes it's normal for traders to disagree and say, George, I did not. It's normal to say, George, I disagree with your wave count. I don't worry about that. All I say to you, this is my wave count. Okay? All right. So I'm looking for, okay, the two books that trader, in fact, must read if you want to learn in your way. I recommend these two books that you have it. You can buy it and read it. Very, very important if you want to understand in your way. Okay. The first one here, that's what I put here, highly recommending this book. So you go to www.24elliottwave.com, click on Wave Theory. Wave Theory. Okay, and you go at the bottom of the page, right it is. You can click on it. It's on Amazon, good price. The best price now is £16.81. If you're in America, you'll be in dollar. So I'm in London, so we have a sterling pound, British sterling pound, 16. It's not too expensive. This is the Area Wave Principle by Robert Prechter. Okay? So you can buy it here, easy. Excellent book that you must read. All right? But then when you are reading the Area Wave, any book, okay, always try to detach yourself from the author. Okay? So you are watching it. Be ready to disagree even with the author. So sometimes you may disagree, and later on you see that, yes, it makes sense. So don't just take everything word by word. Look at it, but keep your mind wide open, okay, to question anything that you disagree with. But continue to learn it. But this book is about the Elliott wave theory. Now, to count wave is a different thing, okay? To apply the Elliott wave for day trading, for swing trading, for market forecast, for investment is a different issue. The only thing is about practice, 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 and continue to learn, continue to learn. That's the only way. So this is the first book that I will highly recommend to traders. The next book, I hope I can find it quickly for you. I don't have to go through everything. Hopefully I'll find it quickly. If I don't find it now, I will talk about it in another, it's not here, in another video, okay, because I don't want the video to be too long. All right. Hopefully I have it here. I don't remember exactly which page I put the second book. The same book again. Where have I put this now? Okay, so this is it really. So one must always, okay, develop their own trading style. And when it comes to Elliott wave, we need to know, not only to know, to understand each wave pattern. So when we are talking about pattern, you want to know where and when the pattern is formed. Whenever you hear the word pattern, ask yourself where and when the pattern, okay, does form. Okay, it's critical. Whether you are talking about crab pattern, Fibonacci patterns, there are time and place where the pattern is formed. Okay, and you want to know, all right, and you want to know where and when, and we have discussed that for each pattern. If you go to our YouTube, okay, a channel, okay, Well, I think I'm going to leave it now because I'm looking for the second book. Otherwise, I will talk about it in another video. If I find it, I will show you the next book that the traders must read. I recommend that book highly to traders. It's on our website somewhere here, and traders can always go and buy it. The next thing I will talk about is the software that is counting, okay, the wave for traders. As I explained to you, it's better for somebody who understands the area wave, somebody who masters the area wave, to go and purchase, okay, the software. The reason why professionals are using trading software is because they don't have time to analyze like 100 stock or 200 stock or 300 stock or 1,000 stocks. All right, so it's better to delegate that job to a software. All right, but at the end of the day, okay, the professional will always filter out, okay, the false signal that the software will give. That's why people go around, they purchase all kind of software thinking that the software can trade for them. But the software plus, okay, a trader, okay, a trader that understands, okay, the tool will produce a better result. But if you go and buy the best trading software, some of them, okay, people talk about it, but I'm not interested. I prefer the mechanical trading system, a written trading system. I prefer that. I read it, understand it, and apply it. I prefer that. But there are times when traders use software, okay? So if you are using a software, it's very important that you understand yourself what the software is about. So you will use it more efficiently. You will recognize the best, okay, signal. You will filter out the distortion, the false signal, and you will enjoy, okay, the software. But if you don't know anything about area wave and you just try to use the software, okay, you are working, okay, you depend completely on the software. I think that the decision maker is the trader, not the software. The software is there to assist the market participant, but the market participant must make the decision to buy or to sell. So if you are using a software that says you buy or sell, there's one software here. You go to our website at the home page. If you want to buy a trading software that will count wave for you, the one that I think trader can use is this one here, the Gecko software. You click on it, it will bring you to the web page where you can download it for free and try it for 14 days. And then if you like it, okay, you keep it, all right, and continue to pay, all right, and then you can buy it at the end. After 14 days, it's not monthly payment, okay, you just buy it in one go, okay, it's one-off payment. So you have 14 days to try, you click on it, Gecko software to count area wave. At the same place, you will see a software about day trading, stock, day trading commodity, day trading forex, but there is also a software that will count area wave from this link here. That's why I put it here for traders. All right. So this software will count wave, the zigzag pattern, and we show trader the pattern. But if yourself you understand the area wave pattern, where and when does the pattern form? What is the psychology of the first wave? The mind game, all right? The characteristic of the first wave, all right? Then this software will be very useful to you. If you trade many financial instruments, then this software is useful to you because it will be time consuming to analyze the wave pattern of each financial instrument. So the software is there to help you. Suppose you are using the software to detect the wave count for forex trading, but you do not understand the correlation between a currency pair. Okay? You can be in trouble if you are using it for forex, but you don't understand correlation between currency pair. So you will be just buy here, sell here, buy here, and you will be ignoring the hedging activity that's taking place in the market, all right, the portfolio adjustment, and all the rest. You will get into trouble very fast. That's why the professional will use software because they understand the software that they are using, and the software is assisting them to do a better job and also to trade, okay, many financial instruments, okay? So I hope I have answered your question. Another thing I need to say to traders that if you ask a question, okay, especially if we give to traders our email and you contact us, you send us email, we receive the email. You can stay calm. Sometime we will answer your question in another video, okay? TST traders, sometimes they ask questions. We reply to them by sending them a personal video sometime. Sometimes a trader may ask a question today. If you are too busy, we may say to traders, we'll get back to you in 3 days, in 4 days, in 5 days. Sometimes we don't reply to traders, but we will answer the question in another video. So, like this week, sometimes we are very, very, very busy. And the last thing I want to spend most of my time on is to spend my time answering too many emails. I don't want to do that at all, okay? I answer email, don't get me wrong. I answer email, but I don't want to spend more than 70% of my time answering emails. I can use that time to do other things. But when a trader asks a question, I will answer the question either in one video or directly to the trader, or sometimes, if the trader asks a question that is confusing, sometimes I may just keep quiet. Or sometimes, depending myself, I can tell you now, maybe you think that I'm being funny. When I was a new trader, you'll be amazed at some of the stupid questions or some of the questions I asked before. And I remember one time I asked a question to one professional trader, and it was a Friday. So I sent him one email, and I waited till Sunday. I didn't get any reply. Then I sent him another email, and he didn't get any reply. And I just gave up. And a few weeks later, he gave back to me and gave me a reply. And I was a bit upset about it. And I could not understand why this guy could not just answer my question straight away. But what's going on behind the scenes sometimes, people are busy. And you may think that, okay, they don't care or they don't pay attention or they don't want to answer the question. That's not the case. Or maybe later on, you will see that, okay, in fact, he was not, okay, rude, okay, and you will understand, okay, because another thing also trader must understand is that very often myself, a lot of traders can contact me anytime through our website, and also the TST traders can contact me and ask questions. And but one thing we want to understand is that we are answering all the questions all the time, either on Google Plus. Sometimes I may post something on Facebook, I may post something on Google Plus, and talk about one specific topic. This is sometimes a trader may ask a question or put a comment on our video, and I may record another video that will answer that comment. Or a trader may ask a question, and I may post something on Facebook or talk about something on Facebook or Google Plus, and this is to answer the question. So traders that are following us, sometimes you'll see there was a trader that asked me a question recently which I did not reply to so far, but I have already answered that question in other videos. But I know some traders who are watching our videos, follow us, they will see that, yes, okay, he answered my question now, and it makes sense, okay? But this is not to discourage traders. If they want to ask a question, just ask the question, nothing wrong with it, okay? If you are a new trader, that's great. A new trader will make a lot of mistakes, okay? But that's the learning process. It's part of a learning process. We all know that, okay? But we want to understand that sometimes, okay, we can be very, very, very busy. So to summarize this video, okay, about the two questions, why do we draw our wave sometimes to the high or sometimes to the closing price? We want to, sometimes we do it because we want to go into the mind of other traders. Sometimes it's because when we go and check the internal wave, we will notice that the wave should not end at the top of the candle, but instead at the closing price because of the internal waves. Now, anytime we want to know the internal wave, the question we want to ask, why do we need to know the internal waves? Why do you want to know? Is it because you don't know, okay? Is it because you are not sure about the wave, whether it's an impulsive wave? Is it because you are not sure that it's the correct Elliott wave pattern? So if you are not sure, yes, you can check the internal wave. But remember, sometimes you may go and check the internal wave and you may not see it clearly. You will see all sort of price move and you won't make any sense at all to you. But then sometimes you will wait few days later as the price progressing. Sometimes you may find a wave count very complicated or confusing. And then as the price progressing, things become clear and you just say, okay, now the first wave should end here. Suppose the first wave is a complex first wave, which is formed of 5 minor waves. So as the first minor wave of the first wave is pushed up, okay, if it's quite bullish, you may label that first your first wave. And then the second subwave comes, you think that is the second wave, the third wave, subwave, the fourth subwave, and the fifth subwave. But then suddenly you realize that in fact those are 5 minor waves, those are 5 subwaves, are just one wave. Then you just draw it from here to here. Now you see it. But as you were here, you thought that, okay, this is the second wave. But no, but this is the second subwave of the first wave. All right? There was one problem also we faced recently, is the dollar yen. When a lot of traders think that the dollar yen is in the third area wave, and I said to them, this is the first wave. There was disagreement going on. But you want to know what's going through the mind of other area wave traders, why they count it like that. Do not discount it and say, you are wrong. All right? I never say to traders send me some time chart and say this is my wave count. I will never say to a trader that your wave count is wrong. I will tell you that this is what I see. Now, if you violate, for instance, an area wave principle, I will highlight to you. So, for instance, if you think that if you draw a fourth wave and it is overlapping the second area wave, I may say to you, no, your wave count, shouldn't be the fourth wave because your fourth wave is overlapping the second wave, which is a serious violation of the wave principle. All right? Or, for instance, if you draw your second wave that has cancelled the first wave, I will say to you, no, the second wave should not cancel the second wave should not cancel the first wave. All right? Or you count 1, 2, 3, 4, 5 waves, all right, and we draw the channel, and it happened to be an horizontal channel. I will say to you, no, this is not an impulsive wave or a motive wave. All right? So all I'm doing is to guide traders, to highlight few things, but I will never impose my wave count on another trader because our trading style is different. But if a trader is violating the market pattern, I may say to you clearly that you are wrong. You should give priority to bullish signal here. You want to sell because you see a wrong area wave pattern, but the price is in a rising channel. Okay? Or you think that you see a flat correction, but the previous motive wave was not very, very bullish, then we will put a question mark on that flat correction. All right? Or, for instance, you see 1, 2, 3, 4, 5 wave down, okay, which is the third part of, an expanded flat correction, and you are thinking that this is the beginning of, a zigzag pattern. We can tell you that this is wrong because the flat correction and the zigzag pattern are two different patterns. For the flat correction, it's 1, 2, 3, 1, 2, 3, and 1, 2, 3, 4, 5. So when we see 1, 2, 3, 1, 2, 3, 1, 2, 3, 4, 5, that 5 wave is not an impulsive wave, and we cannot start thinking of a zigzag pattern because the previous Elliott waves, the 1, 2, 3, and the other 1, 2, 3, is telling us that there's a high chance that the next move will be 5. So spend your time to learn more about the corrective wave, more time about the area wave corrective waves. That's why you need to know, master them, know when and how they form, the equality between the first wave and the third wave. We talked about that. I have covered all this on our YouTube channel already. So that's why now I slow down a bit. So this is it. So I hope I have clarified, everything. So our YouTube channel and our website will assist traders that want to learn more about area wave. But we must always use the area wave with the market pattern. All right. you want to day trade, swing trade, you will use the trading drill. The setup for one time frame, okay, then the signal time frame, and the low risk entry point. The TST trading tool has nothing to do with Elliott wave at all, zero. The Elliott wave pattern or the Elliott wave theory or the Elliott wave strategy is a system on its own. One can trade, day trade, swing trade, invest using the Elliott wave pattern. That's why we do not have any trading system that incorporates the Elliott wave pattern. Now, if a trader, okay, is an advanced trader that understands perfectly, okay, the Elliott wave trader, Elliott wave theory, he or she will use any trading system more efficiently than any other trader because the price is the number one indicator and the purest technical analysis is the Elliott wave theory. Now, the Elliott wave is about reading the price itself, the chart analysis, all right? So when you are using any trading system, the trading system will give a signal and blah, blah, blah. But if you understand the wave structure or the price structure, which is the Elliott wave theory, the Elliott wave pattern, you are likely to use any trading system more efficiently. But you do not need the trading system if you can use the Elliott wave alone, because you can make excellent day trading and swing trading decisions using, okay, the wave patterns alone. Until the next time, enjoy yourself and be very happy. We are the TSTW 24 traders. Speak to you soon.